Good afternoon. This webinar series, Best Practices in Research Administration, is being presented by Incura with the financial support of Eurasia Foundation and the U.S. Department of State. The slides and recordings of all Research Administration Best Practice webinars are available on the Eurasia Foundation's website. Make sure to also check out additional resources on that page, including articles, past webinars, and more. Check your chat box for the link. To download this presentation, please go to the handout section of your control panel. We will have 15 minutes of questions and answers at the end of this webinar. Please send your questions via the chat box in your control panel. My name is Robert Andresen. I'm the Director of Research Financial Services at the University of Wisconsin-Madison. This webinar is the fourth webinar in a 5-part series on best practices in research administration. Today's session we will be covering award management. Our learning objectives are to learn the necessary duties of good award management of an external grant or contract, to understand the importance of institutional roles and responsibilities as well as policies to manage external grants and contracts, and to demonstrate the need for planning in the proposal and negotiation stages of a grant or contract to ensure successful award management. You may recognize this diagram from previous webinars. It shows the life cycle of a research award. As you can see, the post-award or award management phase is the largest portion of the timeline. Depending on the award, it's not unusual that awards could run for several years. You'll also notice that this post-award award management directly follows the pre-award tasks. As a result, activities, decisions, and documents prepared during the submission, review, and negotiation steps have a direct and significant impact on how awards are managed. If awards are properly negotiated and reviewed and contain the appropriate information, it makes it much easier to manage those awards after they have been established. There are many administrative responsibilities in award management. Today we'll focus on these specific areas: award setup and notification, financial monitoring, working with collaborating institutions, financial and technical reporting, modifications, and closeout and audit. Let's talk about each of these in greater detail. It's necessary to set up a unique segregated award in your institution's financial system. What that means is that there will be a unique funding string that specifically identifies that award. It's readily available to all interested parties, whether that's the principal investigator, the research staff, or the administrative staff. They'll be able to track the critical components related to the financial management of the award. Specifically, the amount authorized. That's the amount of the award. How much is the sponsor providing to us? The award budget, broken out by budget category. The period of performance. When is the begin date of this project and what is the end date of the project? Are there any budgetary restrictions? Are these specific sponsor requirements which do not allow the investigator or the institution to spend on certain types of expenditures? For example, no equipment is often a restriction that sponsors impose. The funding methodology. In most cases, grants and contracts are on a cost reimbursable basis. What that means is your institution incurs the expenses and then subsequently invoices the sponsor to recover the funds to reimburse for those costs. Once the award is set up, It's important to notify the researchers, the principal investigators, and the administrators. They need to know every time that they make a purchase what funding string those expenses should be charged to. By collecting those expenses, it provides a real-time report on how the award is progressing and how much funds are left. It also answers questions such as, when does my project end? How much money do I have left to spend? Do I have money to hire an additional research assistant or postdoctoral fellow? When is the next increment of funding expected? Can I shift funds from the salary budget line to purchase equipment? And what are the cost sharing requirements? Depending on the size and complexity of the award and the objectives of the research project, you may choose to take different approaches to setting up an award in your accounting system. Let's look at some examples. In the first example, we have one researcher working in one lab with staff in the same department. In this case, we likely would establish one internal project number with a unique funding string. That collects all of the expenses and provides all the necessary budget information to properly monitor and manage that award. In the second example, we have two researchers working in separate labs with separate staffs, but they are in the same department. Should we establish one internal project or two? The answer is, it depends. Oftentimes, collaborators work very closely together and they can internally manage the funds, so it's possible that you may set up just one project. However, it's often easier to manage each researcher by giving them a unique account with its own unique budget and funding string. This can easily reduce questions or misunderstandings of how much each researcher has to spend and how much progress they're making in terms of using their appropriate budgets. In the third example, we have multiple researchers working in multiple labs across the institution. The question is, how many projects are needed? There's no clear answer to this question. It really depends on what types of monitoring are required, what types of accounting you need to prepare, and what will make the reporting easier. For large projects, there can often be many internal funding strings allocated across the campus. It's important for the administrator to be able to tie those all back together, but in terms of management, it's often easier to set up many internal projects. Deciding on a setup arrangement is really an institutional decision. It's often made with discussions amongst the principal investigators, the departments, and the accounting department to figure out what is the best internal strategy for setting up awards. The second important component of award management is financial monitoring. There are key management systems which you should have in place at your institution to manage extramural or grant funds. These include an accounting system, a procurement system, a property system, and a payroll system. Within an accounting system, there are some essential components. The system should have fund accounting tracking capabilities. You should be able to identify at any point in time the status of a specific research award. It should be restricted to just that award and not commingled with funds from other sponsors or other grant programs. This can often be confusing for principal investigators who tend to think of their funds as one big pool of available funds. But from an accounting and administrative perspective, it's very important to have several segregated components of their funding pool. Budget categories. The system must be able to itemize expenses by subcategories. For example, salaries, equipment, and so on. Budget periods. The system must be able to track by budget period end dates and begin dates. And cost sharing. The system must be able to track expenses which are incurred by your institution in support of this research project using funds that are not provided by the sponsor. This slide is a screenshot of the online accounting report used at the University of Wisconsin-Madison. You will notice that this report does include the UW project number, which is located in the upper left-hand corner of the report, the begin and end date, which is underneath the project number, the total budget, the breakdown of expenses by budget categories, in this case salaries, fringe benefits, supplies, and other expenditures, as well as the remaining balance. In this case, the funds are fully spent. The balance is located in the lower right-hand corner of this report. The second financial monitoring system is the procurement system. Essential components of this identify the needed commodities and their sources, provide competition to ensure that items are purchased at a reasonable cost, purchasing cards, which are used as credit cards for convenient and timely purchases for select items, and a database of vendors who are qualified to deliver the needed goods and services at your institution. The third financial system is a property system. This system maintains an inventory of equipment and capital items at your institution. The system should be able to track by specific award. It should track by the owner. Sometimes equipment and capital is owned by your institution. Sometimes the sponsor retains the rights of ownership for those equipment. It's important to designate who is the proper owner. The system should track by location so that interested parties and administrators know where those items are currently being kept on your campus. And the system should calculate depreciation. This is necessary for various accounting and financial statement purposes. The fourth financial system is a payroll system. Payroll systems, among other things, should include a defined pay period schedule for when employees receive their pay, provide withholding of taxes or other costs for employees, handle fringe benefits, such things as retirement, vacation, and various insurance programs. And they should be integrated with your accounting system so that salary costs and data on who received salary can easily post to the general ledger of your accounting system. In addition to having these four systems in place, successful financial monitoring also requires having a good budget in place. This slide from the Proposal Development webinar includes important categories and considerations. Not every award requires every item on this list, but if they are needed and they are included at the proposal and negotiation stage, it is much easier to manage once the award is set up. For accountants, people in purchasing, and people in the property system management, it's important to know the requirements of the sponsor for the various categories of that sponsored project. Having these discussions early and having them documented in the award will expedite the processes in place for those units. Another important award management responsibility is working with collaborating institutions. Principal investigators frequently work with colleagues and collaborators at other institutions. When this happens, one organization is expected to take the programmatic and administrative lead on the project. Subawards are issued to the other collaborators' institutions to transfer a specific scope of work as well as the corresponding funds to those other institutions. The lead institution is typically referred to as the prime recipient. They are responsible for the overall management of the project and monitoring the programmatic and financial performance of the subrecipient. The lead is also responsible for working directly with the sponsor. In other words, you are taking the role of the sponsor in coordinating, answering questions, providing funding to the colleagues' institutions. There's a process of contracting and invoicing involved between those two parties. Certainly one of the most important components of award management is understanding what expenses are appropriate to charge to a specific project. To make that determination, there are three key questions. Is the cost allowable? This is determined by the sponsor terms and your institutional policies. Is the cost allocable? In other words, is the expense charged in proportion to the relative benefits received by the project? And finally, is the cost reasonable? Meaning that the cost doesn't exceed what a prudent person would pay under the circumstances at the time of purchase. Let's look at some examples. In our first situation, a researcher is working on 2 projects and teaching 2 courses. How would her pay be allocated? A, assume that her time is evenly split among all 4 tasks and assign 25% to each. B, allocate her payroll based on timesheets or certified documents that indicate the percent of time spent on each task. Or C, assign her payroll to whichever funding source is set to expire first. The answer is B. The sponsor expects that it will only be charged for the time the researcher spent on their project. In the event of an audit, they will also expect to see documentation to verify this. Our second example, on February 28, 2017, a researcher purchases a refrigeration unit that will be used exclusively for a research award. The unit was included in the approved budget and budget narrative. The award runs from January 1, 2017 through December 31, 2019. It costs approximately 289,000 rubles. How would the costs be allocated? A, 100% of the cost charged to the research award. B, 75% of the cost charged to the research award and 25% to departmental funds in case the researcher and staff use the refrigeration unit for other purposes. Or C, 0% of the cost charged to the research award since there's no way to be certain of the uses of the refrigeration unit. The answer is A. The equipment was purchased and was proposed and accepted in the approved award. At the time of purchase, there is no reason to assume that the unit will be used differently than it was originally proposed. Our third example, on December 29, 2016, a researcher purchases a refrigeration unit that will be used exclusively for a research award. The unit was included in the approved budget and budget narrative. The award runs from January 1, 2015 through December 31, 2016. It costs approximately 289,000 rubles. How would the unit's cost be allocated? A, 100% of the cost charged to the research award. B, 75% of the cost charged to the research award, and 25% to departmental funds in case the researcher and staff use the unit for other purposes. Or C, 0% of the cost charged to the research award, since the project will not benefit from the use of this refrigeration unit. The answer is C. The determining factor in this scenario is the date of the purchase. Since it was purchased only 2 days before the award's end date, this unit does not benefit the work of the project. Another common activity in award management is preparing cost transfers. This is the moving of expenditures from one project to another. It's done to handle the correction of errors. Cost transfers are a necessary tool, but be cautious to avoid overuse. Multiple or repetitive transfers can be an indication to the sponsor and auditors that the initial assignment of costs is not following institutional or sponsor policies, or there are a lack of strong internal controls at your organization. When preparing cost transfers, be sure to include a description that addresses how the cost meets the criteria of allowability, allocability, and reasonableness. Those are the determining decision-making criteria that need to be addressed and justified to permit the transfer of expenses onto a sponsored project. An essential responsibility in award management is financial and technical reporting. Scientific technical reports are prepared by the principal investigator and the researchers. Financial reports are prepared by the institution's designated financial office. In addition, other reports may be required by the sponsor. For example, property and equipment which was purchased on the award, intellectual property or publications, and so on. As part of the reporting process, coordinating and tracking the submissions needs to be done. It's important to organize to make sure that everyone understands who is submitting what report and to verify that those reports are being submitted to the sponsor using the appropriate templates or electronic systems provided by the sponsor. In some cases, you will need to follow up on delinquent reports. Sponsors do expect those reports, and they are typically a condition to receiving the final payment on awards and satisfactory conclusion of the project. From a financial perspective, billing and accounts receivable may be the most important award management responsibility. Receiving the cash from the sponsor does not happen automatically. You will need to determine the frequency and the type of invoicing necessary to collect from the sponsor. These requirements are typically laid out in the grant or contract agreement. If they aren't, you do need to have conversations with the sponsor to ensure you understand how the funds will be transmitted to your organization. The two most common sponsor invoice requirements are cost reimbursable, meaning that you invoice for expenses after they have been incurred and paid by your institution, or fixed price, which are payments based on defined amounts issued at specific dates or upon delivery of specific deliverables. Dates and deliverables will be outlined again in the sponsor's grant or contract agreement. Some recommendations for billing and accounts receivable processes. Use the specific forms, templates, or electronic system provided by the sponsor. If the sponsor does not have specific forms or templates, you will need to create a standard invoice template for your institution. Included in that template would be information about the expenses, where payment should be delivered, and where questions can be addressed in the event the sponsor needs follow-up or additional documentation for the charges on the invoice. You will need to establish a collection process to follow up on unpaid invoices to sponsors. Unfortunately, not every sponsor pays on a timely basis, and sometimes invoices can get lost or misdirected. So it's important to follow up and have a process in place to ensure that you do collect the funds. And you will also need to have a process for writing off uncollectible invoices. Uncollectible invoices are rare, but they can happen for a number of reasons. For example, the sponsor may go out of business, or the sponsor may be unhappy with the work that has been done, or may question the timeliness of the deliverables. In those cases, it's important to have conversations with your investigators, with central administration, and in some cases your legal advisors, to figure out what steps can be taken to collect or to write off uncollectible invoices. Over the life of a research project, there can be many changes that require the original award be modified. These include no-cost time extensions. It's very common that the period of performance that was originally proposed needs to be stretched out so that work can continue and be brought to a timely conclusion. Requesting additional time does need sponsor approval. Requests for additional funding. Sponsors oftentimes will provide additional funding, but again, you do need to modify the award and have the sponsor's approval to receive additional funds. Rebudgeting. Sometimes when proposals are developed and the initial budget is prepared, things change, and it's necessary to increase the expenses in one category, say salaries, and decrease them in another, say equipment. Sponsors have specific requirements on when rebudgeting is allowable, what types of approval is necessary, and the process for getting that approval. A change in the scope of work. Sometimes the ideas and research agendas in a proposal change, and the directions of the science move in a way that couldn't have been anticipated at the time of proposal. Changes to the scope of work almost always require approval prior to initiating those changes from the sponsor. Changes in key personnel. People in the original proposal may leave, they may have issues regarding their health or changes in their life, such as family leave or other situations which require additional or different personnel work on the project. These changes often require approval from the sponsor. Suspensions or terminations. Awards can be ended by the sponsor with prior notice. Handling those terminations can also be required. It's also possible that you may choose to terminate an award. Unfortunately, this can happen if a principal investigator or researchers have medical issues or are unable to complete the project. So you may initiate a termination with the sponsor. And sometimes principal investigators leave our institution to go to a new institution. Transferring awards and transferring principal investigators requires notification from the sponsor. In each of these situations, you should follow the sponsor's terms and conditions. Many of these will require specific written approval from the sponsor and written amendments to the original sponsored agreement. At some point in time, each project will come to an end. As the awards are being closed out, there are some key responsibilities. There needs to be a final review of expenditures. You'll need to verify the allowability of expenditures, whether they are in compliance with the approved budget, and whether the expenses were incurred within the period of performance. Final reports need to be submitted on a timely basis. These include the scientific and technical reports, financial reports, and any other sponsor required reports such as intellectual property, equipment, and so on. These reports should be tracked, and follow-up should be done internally on delinquent reports. Tracking submissions is very important. Many sponsors are very large and manage hundreds, if not thousands, of awards at any point in time. It is possible that sponsors can lose reports and ask for copies or remind you that reports have not been submitted. So being able to verify that yes, those reports were submitted and who they were sent to is very important. Also, you should determine the appropriate record retention. How long do we need to keep the files and records on these projects? Sponsor requirements are typically included in their policies. In addition, your institution may have its own records policies. In general, whichever policy requires records be kept the longest is the policy that you should be expected to adhere to. Be aware that sponsors have the right to request additional information and may exercise their right to conduct an on-site audit. Audits can be for routine monitoring by the sponsor. As part of their due diligence on how their funds are being spent, they can routinely select large awards or small awards from a variety of institutions for audit, or they can be audited for cause. Cause is typically created when there is a whistleblower, that is somebody who has alerted the sponsor of concerns or allegations that the funds are being mishandled at an institution or within a specific project. Audits can also be reviews of specific transactions. They may ask for documentation for certain categories of expenses, say salaries or equipment or travel. They can be on specific institutional processes. For example, our institution was once audited on how it managed its property. So we were required to provide documentation on our inventory system, as well as provide records on specific pieces of equipment, where they were located, how they were tagged, who to indicate the proper owner, and how we disposed of property after it was no longer needed at our institution. Audits can look at those types of things separately or together. It's important to identify an institutional audit liaison. This is a staff person at your institution who's the primary point of contact for the auditors and who can organize the work within your institution to respond to the auditor's requests. Auditors typically require a lot of documentation. They require copies of policies, procedures, as well as copies of vouchers or invoices for many projects or for an extended period of time. Coordinating the accumulation of those documents, providing them to the auditors on a timely basis is very important. So having a single point of contact to coordinate those activities really helps in this process. Here are some links for more information on Sponsored Projects Administration, including links to university websites containing policies and procedures useful in managing awards. You'll also see resources from U.S. organizations such as the Council of Government Relations and Incura, which provide broad oversight on effective management practices and award management activities. If you ever need to use policies, I'd recommend looking at some of the institutions on this site: Stanford University in California, Yale University in Connecticut, my institution at the University of Wisconsin, and the University of Minnesota. There are several policies and procedures online which can give you an idea of some of the typical requirements that large research universities typically have in place to manage their projects. At this point, we're going to open it up for questions. Please use the chat box in your control panel. Our first question is it possible to obtain additional funds if the project warrants it? The answer is, it is possible. It's not always a guarantee, but it really depends on the relationship that your investigators have with that sponsor. Oftentimes, it is possible to request additional funds from the sponsor as long as you can provide information about the progress that is being made, as well as the need for funds to help the program to increase or enhance the knowledge that is being accumulated from that project. It doesn't hurt to ask for additional funds, but be aware that many sponsors get many requests for funding, so there is no guarantee that you will receive additional funds, but it is definitely a possibility. What if I need more time to complete the award? What options are available to me at that point? Requesting more time is probably the most common award modification that we see. Most sponsors understand that projects typically don't start as quickly and get up to speed as quickly as we hope. So they're very understanding in granting no-cost time extensions. That means that whatever funds you have available, you can continue to use for an extended period of time. This is very common in the United States. In fact, it's so common that most U.S. federal agencies allow the institutions to unilaterally approve a no-cost time extension at their institution and notify the federal government that that time extension's been in place. You should always review the sponsor terms and conditions on time extension requests, and I would recommend that if you know that you need additional time, that you make that request within 30 to 60 days before the end date of the project. Another question, if I'm dealing with a new funding agency for the first time, what resources are available to me to become familiar with the funding agency? How can I get in touch with others who have dealt with this situation before? There are many resources available. Many funding agencies will have a list of what their current projects are. Looking at that list, it's often possible to find the institutions that are currently working within those programs. Building a network of colleagues at other institutions is really important for research administrators. So if you are working with institutions, what we typically do is we find an institution that has received an award in this program, and we reach out to our counterparts at those institutions and ask questions. Also, sponsors are very accommodating in answering questions. Typically, there are two main roles at a sponsor: a program officer who's available to answer questions on the science and technology components of a project, and a grants officer who can help with administrative and financial requirements. They're very receptive to receiving questions either by phone or by email on issues that you may have or clarifications that you may need. It never hurts to ask questions. If you are experiencing difficulties with a sponsor, I would definitely recommend looking to your colleagues at other institutions to see if they're sharing similar experiences and seeing if they've been able to solve the types of issues that you're encountering. In research administration, many people are very willing to share their experiences and suggestions, so don't be afraid to reach out to your colleagues at any institution. How important is it for the PI to understand what types of costs can be charged to the grant? How do you help a PI become familiar with this? It's essential that the PI understand what the sponsor requirements and what your institutional requirements are for spending funds. Just because we've received a grant does not mean that the funds can be used for any purpose or any type of expenditure. Some sponsors are fairly flexible, but some sponsors are very restrictive in the types of expenses that they will reimburse the institution for. It's good to sit down with the principal investigator and outline very specific restrictions on awards. It's also helpful if you have a financial system which can provide reports or provide a very high-level indicator on types of expenditures. Earlier I showed you one page of our online financial system. What I didn't have time to show you is there are several additional tabs, including one called Funding Restrictions, which provides very high-level notes on types of expenses that the sponsor does not reimburse. So for example, in that tab you could find a statement that says no equipment or foreign travel is not allowed without prior approval from the sponsor. We typically call out those types of expenses which are unusual or infrequent to the principal investigator. People working in the departments or sometimes research staff are very adept at reviewing these types of things, and we work very closely with them to make sure that those expenses are reviewed, approved as necessary, and if not approved on the specific sponsor project, we can identify a different funding source that potentially could cover those activities. Who is responsible for all this work at your institution? In other words, who coordinates in particular the following: reports, managing the deadlines, providing reports, and monitoring? Is it the researcher, the project leader, or a particular department? Typically at our institution, while the PI provides the general oversight and management of the project, we really try to encourage and provide support so that the faculty member and the investigator really focuses on the science and technical components of the project. At our institution, we have people working within the department who handle the administrative requirements, who oversee the administration of submitting reports, reviewing the financial report, providing expenditure review, and coordinating with the central accounting office to make sure that the funding strings are appropriately set up, managed, and closed out on a timely basis. For us, the departmental administrator and the central administrator are considered part of the research team because they handle what can often be administratively burdensome or bureaucratic to free up the time for our faculty, for our principal investigators and our research team who concentrate on the science and technical components of the project. Is it possible to change the PI for any reason and still maintain the fund to implement the rest of the research project. It is if you have a suitable replacement for the principal investigator. Depending on the science and the specific scope of work, there may be other people on the research team or collaborators at your institution who can provide a suitable replacement for a principal investigator. Such changes typically need the sponsor's approval, but if you have somebody who fits that role, it's certainly possible. Unfortunately, there may be situations where the science and the knowledge required is so unique that only the principal investigator that's currently working on the project has the knowledge to continue that project. In those cases, if the PI were to leave your institution, typically you would relinquish that award back to the sponsor so it can be reissued to the new institution, or in the event of a health or life change situation for that principal investigator, the institution may choose to terminate the award simply because there is nobody at the institution who can adequately bring that project to completion. Are there key differences between managing a STEM project versus a humanities or social sciences project? A STEM project concentrates mostly on science and technology. There are differences, but there's also a lot of similarities. I think the primary differences are in the nature of expenditures that you see in a science or technical project versus a social sciences or humanities project. Typically, in a science project, you would expect that there would be a lot of laboratory supplies, much equipment expenditures, and very high technology expenditures and activities. In social sciences, the types of expenses that you see are often less in those areas, but more in travel, in providing funds for research studies and collaborations. There's often much more work with individuals in terms of having surveys, in having interviews, in having conferences and symposiums. If you're working with humanities projects, those typically are very unique art projects, or again involve a very specific set of travel, which may involve field work to various sites or research at various libraries or art facilities around the world, which involve much more time for the faculty member to be off-site. So it's important to understand the scope of work and understand the nuances of the types of expenditures. But having said that, there are many similarities. The reporting requirements are typically the same. You are expected to provide a certain amount of salary support for the people working on the project, and the timing of all of these in terms of the period of performance is very critical. Under what circumstances would a funding agency take away an award? There's a variety of situations where that could happen. Sometimes it involves economic situations where the funding agency has an unanticipated financial situation and can no longer afford to sponsor that program. We saw that in the worldwide recession in 2008 through 2010, where the economy was very bad and funders just didn't have funds, so that in those cases they can take away an award. Sometimes, unfortunately, awards can be rescinded because they're unhappy with the work that's being done at the institution. Sometimes faculty members are not as prompt or not as cooperative with the funding agency in getting the reports or results back to the sponsor as needed. and in those cases they can rescind the award. Typically you don't see a sponsor unilaterally taking funds away unless there is a pretty significant crisis of some sort or another. What are common differences between managing a government grant versus a private foundation grant or a corporation-funded grant? The first difference is the mechanism used to issue the funds to the institution. Typically, if it's coming from a government source or a private foundation, they are considered a grant, which is a mechanism to provide assistance for the completion of the project. The reporting requirements tend to be much broader. The projects that they fund tend to be much more all-encompassing. They often are basic research, meaning the outcome is not totally predictable. We aren't quite sure what results or what outcomes are going to result from this project. And there's a less degree of involvement from the U.S. government or any government or private foundation in the day-to-day management of the project. If the funds are coming from a corporation, those are typically issued through a contract. And a contract usually has very specific deliverables with specific dates of delivery. Corporations typically expect to see very specific results and very specific outcomes. If those deliveries are delayed for any reason or the outcomes are not as the corporation was expecting, payment becomes a major consideration. It's not uncommon that corporations will withhold payment until they receive those deliverables, and corporations tend to be more involved in the day-to-day operation, working with the principal investigators and research staffs to monitor what is being done and how things are progressing. Can a researcher get funding from two different sponsors, and how can he manage to meet the regulations of both parties at the same time? The answer is yes, and it's very common. Researchers typically have ambitious agendas on the types of research that they want to accomplish, and to do that, it's often necessary to receive funding from more than one sponsor to handle various components of the broader research objective of the investigator. In order to receive funds from multiple sponsors, it's very important that your accounting system be able to segregate those funds and be able to track very closely the terms and conditions of each award. This is where research administrators really play an important part of the research team by managing all of the specific requirements of each of the sponsor. It's not easy sometimes for investigators to understand that one sponsor is very restrictive on their terms and conditions and others are more flexible. And so administrators can bring their knowledge and expertise to the conversations with the investigators to handle those management responsibilities. If I'm being considered for a subgrant from another institution, how can I prove or assure the other institution that my award management system is capable of managing the subgrant properly? It is a requirement now within the United States that the prime recipient do a risk assessment of their potential subawardees. Typically, this is accomplished by a questionnaire which will ask questions about the existence of components of an accounting system, the volume of activity that is available, that is currently at the institution, and the types of awards that your institution is currently managing. Depending on the volume of activity at your institution, you may be required to have an audit of your management of sponsored projects, and typically the prime recipient will ask to see a copy of that audit report. All of those pieces of information will be collected by the prime recipient, and they will determine internally how risky they believe your institution is. If your institution is deemed to be high risk by that prime recipient, they often will impose additional requirements. These are typically additional pieces of documentation for submitting invoices or more frequent financial reports to mitigate some of that risk. They may also ask to have conversations with your management staff to provide some training or overviews for the specific terms and conditions of that subaward and be in more frequent contact for you. Typically, if you have a history of receiving subawards from other institutions, it's very useful information to share with potential prime recipients. The more they are comfortable that you have managed other sponsored projects, the more comfortable and less burdensome their sub-agreement requirements will be. Oftentimes, a funding agency requires availability of specific equipment, but other external organizations may have it, and it could be more effective to borrow it from them. In this case, how does the reporting process work for using their equipment? You don't always have to buy equipment, and in terms of borrowing equipment, that can certainly happen. You may also rent equipment, or you can use facilities and be charged usage fees from other institutions and charge those directly to the grant. The best way to handle the arrangements for equipment is, if you know the situation at the time of the proposal, to include those costs either as the purchase of equipment or as rental of equipment or as a usage charge in the services item of the budget, and explain in the narrative that these costs are being incurred for the usage of the equipment that's being proposed. If the equipment is being borrowed and it's temporarily being located at your institution, you will want to have it properly tagged and marked in your property management system that it is owned by another organization. So in the event of an inventory or in the event of loss or damage to that equipment, your institution knows that they will have to work directly with another organization to figure out what to do with that piece of equipment. And I'm not seeing any new questions at this time, so this concludes my presentation today. As a reminder, the slides and recordings of all research administration best practice webinars are available on the EF website. A recording of this webinar, along with the PowerPoint presentation in both English and Russian, will be uploaded by next week. Please check your chat box for the link. To find out more about Incura, please go to www.incura.edu. And if you have any questions about award management, please feel free to contact me directly at the email appearing on your screen. If you have other questions about research administration, please contact Jesse Cito, Director of Incura Global, at Cito, S-Z-E-T-O, @incura.edu. We hope that you will be able to join us for next week's webinar. Panda Powell, the Director of Sponsored Programs and Research Compliance at the University of North Carolina, Wilmington, will be presenting on institutional policy. Before you exit the webinar, please fill in the post-webinar survey. You can find the link to the survey in the chat box. Thank you.